Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video I wanted to share some ideas with you on Target. So when you look at a clean chart of Target, and we're using this here in Thinkorswim, which is one of the main platforms that we use, and I like showing you this one too because they have built-in indicators that can show you some of the main signals we're looking for. In this case, not only might you look at Target and look at this little bit of a wedge pattern and think of that as compression and something that's about to suggest a move. But then if you come into studies, and we'll add John Carter studies, the squeeze is also a very similar study, and it is just something that suggests that we're about to have an expansion of volatility or a significant move. In light of thinking that, do you think it's going to come down here and fill this gap? Or are we going to head back on into our next bullish extensions? Well, the time of year may not hurt anything, but I always like to I prefer trading a little bit more technically. So if I come into my study sets, and we're going to add the 5, 100, and 200 day moving averages to this, this is just something that right off the bat will start to clarify for me, okay, as price is above these broad moving averages, I really need to focus on playing this to the buy side. That is one of your broad pieces of analysis that people will typically find helpful with that. And that's how I like to look at it from, a broad swing-based perspective. Now if you wanted to get a little bit more specific, this is where you get down into the 21 EMA, because of course as you use smaller and smaller values for these moving averages, you'll find that they trail closer and closer to price. The 21 is one that we've used for the longest time, and it's very common off the daily, just used as a reversion to the mean. So the broad moving averages tell me I need to analyze this from the buy side. The 21 EMA tells me that that's a fairly immediate decision, and then the last piece of information I wanted to show you on this is always looking at the decline that precedes the rally. So here we've got a high of 69 and a quarter. That actually was a double top right there. So 69 and a quarter into the low, run from our most current high, and then you'll notice very nice symmetry in this. So what this is telling me is that this was the last move that bears really got to make. This was the push down into that low. What happened after that is kind of like what I'm looking to happen again. So you can see the repetition of these patterns, the way we're trying to set this up technically, and hopefully that gives you a good foundation for what I'm trying to play in Target over the course of the next 30 days. One other thing I wanted to make sure you guys were aware of, speaking of the next 14 days, as we head into the end of the year, we will have the Tax Loss Harvest course with John. That's going to be on December 30th, which is nice this year. It happens to fall right on a Friday. So this is one of the classes he does every year. I always look forward to it. Here's some of the topics that we'll be looking at live on that day. We'll plan from trading from 8:30 in the morning all the way into the end of the cash close. And if that's something you find helpful, I hope to see you there.